Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. Well, the stock in focus is actually Canfin Homes, and there is a spot of bother in the numbers. We're seeing disbursements actually fall. At one point in time, Canfin Homes was doing even 20%. Even last quarter was 12% disbursement growth. This time it's 1%. Assets under management also have grown more slowly, and the net interest margins have declined rather sharply. SK Hota, the managing director of Canfin Homes, joins us now. Good morning, Mr. Hota. First up, what went wrong with net interest margins? Why was there such a, almost a 35 basis point fall?
Yeah, good morning, Lata madam. What has happened is practically it is the cost factor which is playing out. There has been substantial increase in the market, the borrowing costs as well as the MCLR of banks, which is really hurting us, because that is the prime source for us. If you see the quarterly standalone cost for Q4 and of last year and Q1 of this year, the costs have gone up by almost 27 basis points, whereas the yields have increased by something like 14 bips. So that is really impacting the spread. Simultaneously, the growth as well has been a cause of concern for particularly our South territory. Karnataka is yet to pick up to the normal growth rates. The sector as a whole has been a bit slow. The rest of the country, we have disclosed the rest of the country, the sanctions have been up by almost 16% and disbursements by around 14%. And even the outstanding loan book is growing at around 23%. But having said that, I source almost a third of my portfolio of my loan book from Karnataka and around 16-17% from Tamil Nadu. These two constitute almost half of the loan book.
And
that is how
you don't have too much of
the growth.
Yeah, how is the growth demand for loans over there in those territories?
The demand remains very much there. The issue is from supply side, because Canfin operates in that particular segment, which is in the average ticket size of something like 25-30 lakhs in the metros, and in the non-metros something 10-15 lakhs. That is how the average ticket size of my housing loans are around 18 lakhs.
Sure.
And that has really come down now. For this quarter it is around 17.75 lakhs or so.
Okay.
Yeah.
Okay, so what kind of
So the demand remains very much there.
Sure, go ahead.
Demand very much remains there. What is worrying is the number of projects those were being launched in that particular segment that has come down. Post RERA, the customers' confidence has increased significantly. There is a lot of demand. The population has not reduced in this part of the country. Only thing is, somebody has to really address the supply side issues, particularly in the segment we operate in.
But shouldn't the affordable homes and the CLSS scheme, the huge subvention that is being given for even middle income houses, is not all that helping? Or isn't supplies coming?
Yeah, middle income segment has helped, particularly the 45-50 lakh range. But Canfin doesn't operate much in that segment, because almost 90% of my portfolio, it comes from LIG and EWS.
But LIG also has got a lot of subventions. Not helping?
LIG subventions are there. LIG, there are issues in terms of supply side, as I told you, because the number of builders who are operating and who are creating those stocks, post RERA, they are yet to be included. They are yet to be brought back to launch new projects. Somewhere that is hurting, because now the sector is consolidating, even the builder segment. Maybe going forward, now we are seeing fresh launches of the big players getting into the affordable segment. But I have got my suspicion about whether they can cater to the huge demand that lies. The number of builders as well in the segment must increase.
So what are you looking at in terms of overall loan growth and disbursement growth for the full year?
Yeah, that is how the company has changed its strategy. Our South concentration had been a strong point. It has been a strong point. We are still bullish on that whenever the growth returns, as I told you, the other geographies are already back into the normal growth phase of around 23-24% in the loan book, whereas the South territory is still sluggish in single-digit growth. So when growth returns, that is there for us. Because the growth is happening elsewhere, our branch expansion plan we have shifted to the north. Last 2 years, if we have disclosed that in our presentation as well, if you see, all our branch expansion is mostly non-south, tier 2, tier 3 and tier 4 cities. So we are penetrating deeper because there is huge competition as far as the metros are concerned, particularly from the banks, because they enjoy those cost of funds that the rate war is really, it is pushing us to on the territory which is non-metro and which is not even tier 1.
Okay, two quick questions. One, will you get into middle income houses at all?
Middle income houses I can get in provided somebody reduces my cost of funds, if I have got access to the cost of funds. Unfortunately, we are a non-banking company, and my marginal cost is always, it depends on what are the market borrowing costs and what are the MCLR of banks.
Well, you all enjoyed, of course, all of 2016 and 17, but now the tide is turning. That was my second question. If there is a rate hike tomorrow, will it hurt?
Yeah, that is where really it will hurt the margins of all the NBFCs, all HFCs, not alone CanFin. Because we operate mostly, another thing is CanFin has been, it has not deviated from its the basic what are the fundamentals, that we are primarily into housing, not that big into non-housing. And despite being into housing, now you have seen and you are commenting about the asset quality. But one thing is, that is a strategic decision as far as asset quality is concerned, that we want wherever there is lot of pain, it is better that yes, you invoke SARFAESI and get into the recovery action. Because we understand that yes, recognition of the NPAs is the first step towards resolution. If you don't recognize, then you will not be in a position to take action.
All right. The Reserve Bank will be
out of the 107 crore of 107 crore of NPA that we have disclosed. On 85 crore already the SARFAESI action is in different stages. And
good to hear that.
That it can be sold.
Yes, good to hear that, Mr. Hota. But life definitely getting a little tougher for NBFCs as a whole because of the rising cost of money. Thank you very much for joining us. Well, with that, let's shift focus back to the markets. Where, well, there's a little bit of red. It's not gotten redder, but it's not come back to green either. Time we invited our technical experts, Ashwini Gujral, Mitesh Thakkar and Rajat Bose, join us now. Good morning again, gentlemen. Ashwini, did you buy that dip? And do you think the time to go long is even now?
See, I didn't buy that dip, and there was some buying which came back. But again, we failed at yesterday's closing. Yesterday, what happened was that we went down, and Bank Nifty took the previous day's close out and previous day's high out. Today, that seems to be failing. So, chances of this correction getting a bit deeper could happen, because in fact the market is lower than when we last spoke. So that way I think banks could shed some more ground. We have now short positions on Bank Nifty, but they are intraday. I just think that this will be a deeper correction, and buying 20-point dips may not work. This could be more like 70-80 point dip. So 10,250, 260 may really work out. Similarly, Bank Nifty, maybe it can give back a couple of 100 points from here, and that just strengthens the market. Individual stocks, Idea is a sell with a stop of 59, target of 52. Tech Mahindra is a buy with a stop of 674, target of 700. And Vedanta is a sell with a stop of 227, target of 212.
Okay, by the way, the stock that is surging now is Escorts. It's up almost about 2.5%. The intraday chart should come up for you. There's a spike after the management has raised the guidance for the entire sector, for the tractor industry, to 12 to 15%. And there you have it. After our interview, the stock has actually moved up quite a bit. Mitesh Thakkar and Rajat Bose join in as well. Mitesh, your quick thoughts on how to approach these tractor makers, Escorts and M&M. Would you buy any? And any other stocks you're looking at this morning?
Yeah, I do like both of them. I think Mahindra & Mahindra is just on verge of breaking about the 940-45 zone, which has been the earlier intraday pivot. So I think once it does that, I think 990,000 could happen there very shortly. Similarly, Escorts, if I talk about, I think again, it's gone into an uptrend in the last few days. And as long as now it remains above this 900, 890 zone, good chance that we are looking at a four-figure figure level being tested over here. Coming to my recommendations, I have a buy on Voltas with a stop at 554 for targets of 588, and Delta Corp is a buy as well. Slightly position kind of a call. Keep a stop at 242. Look for target of 290.
Okay. Ashwini, is the fresh call on Axis?
See, all of these, corporate lenders, etc., they are going through a correction. So from a, bit of a view, if you want to do it, maybe Axis will also fall back towards 550, 555, where again it can be bought. But today, I think most of the corporate lenders are going through profit booking.
Okay, Rajat Bose is also with us. Rajat, what stocks would you be looking at today?
I'm actually looking at two stocks. First is a contrarian call on Indigo. I would put a stop loss below 882, and it's actually a positional call in the sense that 2 or 3 days maximum time I would take that 1024. I have a feeling that 883, my stop loss would not be violated, and Indigo would give a bounce back to at least 1025 kind of levels. And the other stock that has come very close to my stop loss, so I would revise the stop loss a bit. 883 would be the stop loss for Titan, but I would retain the targets of 907 and 915 on the upside.
Okay, gentlemen, thank you very much for joining us with your thoughts this morning. DLF is up 4%. Is there any corporate action, or is this because Oberoi Realty did well?
Well, Oberoi Realty, Prestige Estates, so we've had some of these
real estate stocks,
but they're all different. You can't compare each company
different
with
markets,
another.
different segments altogether. But there is, I just noticed that DLF has moved up, and much of it has happened lately. I think we should pull up DLF intraday as well. Okay, there it is. It's an early morning rise. Okay. Well, let's continue with our earnings analysis. After all, earnings rush continues even today. The big ones lined up today include Tata Motors, Vedanta, United Phosphorus, that's UPL, Power Grid and Dabur. Our research team is here to tell you what the expectations are. Sonia, we are going to start off with the big boy Tata Motors.
Well, for Tata Motors, the most important is the Jaguar Land Rover number. This time around, the consensus estimates for profits are all over the place because some are expecting even a £250 million forex loss. So we're just going to talk about the EBITDA numbers. On the revenue front, for Jaguar Land Rover, it's hardly a growth this time around, just 0.9%. On the EBITDA front, now for Jaguar Land Rover, year on year, we're expecting a 15% jump. But sequentially, actually, this will be the first time in 3 quarters that the margins for JLR will fall below the double-digit mark. So we're expecting 9.8% margins coming in. And overall as well, for the estimates, the consensus estimates are at about 9.8% this time around. Now, for the standalone business, there is an improvement that the street is penciling in. There's a profit, EBITDA profit of around 1,000 crores or so, 1,100 crores to be precise, versus a loss of 72 crores same time last year. The standalone business has picked up. The CV volumes have gone up 70%. Overall volumes have gone up by about 61%. But it's really JLR that could be under pressure.
All right. And with that, we go to Vedanta. Nigel?
For Vedanta, the numbers that should flash for you on the screen, those are the least important. For Vedanta, you're always looking at the segmental performance out there. Hindustan Zinc, the numbers are already in the price, so we leave that aside. Close to around 50% of the profitability comes in from Hindustan Zinc. What you're focusing on is the segments. And remember, for Vedanta, base metal prices have gone up, so that's what will support the numbers. Starting off with aluminium, there you look out for an EBITDA number of around 850 to around 1100 crores approximately. Aluminium prices have moved up, but keep in mind, even alumina prices have moved up. They're not integrated, so that will limit the EBITDA gains. For the power business, the EBITDA number we're working with is around 430 crores approximately. Oil and gas, that's going to be the big driver. Higher volumes coming out of there. Crude prices as well have spiked up. EBITDA number of around 2,000 crores. That's the most important number of in terms of these numbers. And the zinc international business should deliver a number of around 260 crore rupees. Vedanta gets hit because iron ore operations have been shut, and their copper smelter as well has been shut in the past quarter. We'll await the numbers.
Thanks a lot for that, Nigel. Sonal is also here with us. Sonal, what are you expecting from UPL today?
Well, Sonia, good set of numbers are expected from UPL this time around, and this growth will majorly be driven by the Indian markets. So revenues of around 4,121 crore rupees implies a growth of around 11%. EBITDA also is expected to grow at the same levels of around 10%. Margins, however, are expected to be flat, and that is because of higher operating costs. Profits again are expected to grow at around 9%. But now let's talk about the geographical breakup. up. Indian markets, the growth from Indian markets is expected at around 11%, and revenues from that is Latin America, because Brazil is one of the biggest markets of the company, is expected to show growth of around 0 to 2%, and that is majorly because of depreciation of the Brazilian real. North America and rest of the world markets are expected to grow at around 7%. Overall, Kotak is expecting volume growth of around 7%, price growth of around 1%, and 1% growth basis the cross-currency movements. Now, in this particular company, there are a lot of adjustments which relate to forex gains and losses.
Okay.
Some brokerages are expecting no losses or no gains, so we'll have to watch out for that today. Back to you.
Okay, thanks for that. And Anisha, Power Grid is the big one.
Oh, well, yes, it usually comes out with a steady set of numbers, and that is what is expected this time as well. We're looking at a top line growth of around 14%. Margins are expected to remain stable around that 86% mark, and profit are expected to go up by around 8%. Now, the profit growth is a bit slow given the fact that the other income is expected to go down. Other than that, the capitalization has been strong in the last 12 months, and that is what is expected to grow the top line. Do remember, for Power Grid, the most important number to watch out for is the capitalization number. They have guided for 26 to 28,000 crores for the entire year, and for the quarter we are expecting a number of anywhere between 3,500 to 5,000 odd crores. Management commentary will be the key, because most of the street now believes that the capitalization has really peaked. So comment on that, as well as the draft tariff policy is just around the corner. So a word on the regulated equity is something we'll watch out for. Back to you.
Okay, thanks a lot for that. And finally, we have Dabur. The stock is at a 52-week high ahead of its numbers. How are they expected today? Mangalam?
Sonia, the results are expected to be good on four accounts. One, there's a low base. Secondly, the international business, which accounts for about 25 to 30% of their revenues, will recover as the oil prices are higher. Thirdly, the company's innovation-led growth will come. Innovation-led growth will come by. And fourthly, the competitive intensity from Patanjali has come off. So on the basis of that, we're expecting a revenue growth of around 13%. Margins are likely to expand by nearly 200 basis points on the back of an EBITDA growth of about 25%. Net profit growth of about 27% is on the cards. The number you're looking at is close to around 340 crores on the bottom line. The important number for Dabur, domestic volume growth, seen anywhere between 12 to 14%, some even expecting higher than that, and that is on account of a low base. In Q1 FY18, we saw a volume decline by 4.5%. So to digest all these earnings, perhaps Dabur is coming out with Hajmola.
Hajmola, right? I think that's something that you and I might need, right?
Anyways, we'll await that.